Guess which company we will analyze today? Hello! In this episode of Esali Investments, we invited some of our experts to analyze the company Twitter. Given the recent events, we find it necessary to give you some insights on how this will affect your investment decisions.
We at JP Morgan look at a whole host of metrics when valuing a company. We also look at benchmarks. For Twitter, we believe that LinkedIn and Facebook are the two most appropriate competitors. One metric I want to give to you is what we call the market capitalization divided by revenue. In Facebook's case, they're trading at 21x times their revenue, and for LinkedIn, it's 11x. We believe Twitter should sit in between the two of those, and they're actually sitting at 14x. So that means the market capitalization is 14 times the revenue that they brought in 2014. And so that puts the share value at about $30, which we think is reasonable, assuming that they hit their 8% growth rate on active users every month.
The last 2 weeks have been a very active time at Twitter, with all of a blur of announcements about the new CEO Jack Dorsey, the polemics about his duty at Square, and the communication of layoff of 80% of the workforce. Although investors have been pushing for a leadership change since last January, the new leadership announcements have been received mildly, with stock price raising only about 7% up to $30. Investor main concern is about growth. MAU growth has been slowing down and it is now at an anemic 12%, with forecasts not getting better. On user engagement, they are struggling as well, and companies stopped disclosing timeline views. In order to reignite user growth and disclose its customer value, the company invested heavily, close to $700 million in R&D, effort that materialized in features as Tab Moment, Project Lightning, and Amplify. They as well invested heavily in buying new companies such as ZipDeal, Wine, and Periscope, and in new partnerships as the one with Google DoubleClick and with the National Football League. All these efforts are intended to boost user growth and advertising revenue, and if Twitter succeeds in reverting this trend and communicate to the company how to best leverage its platform in the advertising campaign without becoming too spammy, the upside could be huge, and Twitter could reach the break-even. Nevertheless, long-term strategy remains unclear, and investors are willing to see which rabbit will Jack Dorsey pull out of his hat.
We at JP Morgan would not be investing in Twitter. That doesn't mean you shouldn't. It's just that we see there's a lot of risk in the business model that Twitter employs. That said, if you believe that they can get to the same user base as Facebook, so go from the 300 million active monthly users to more like the 1.5 billion, there's an awful lot of upside to the stock and it appears undervalued. We don't see a clear strategy, so we're avoiding it. But if you believe in their business model, believe they can get to that magical 1.5 billion users that Facebook has, then please go ahead, be our guest and invest.